Hey everybody, it's me, Greg Boston, CPA and president of QuickBooks Made Easy for Nonprofits, coming at you with the second tip for July 2025. This tip is pretty advanced. This has to do with when you are looking at your balance sheet in QuickBooks Online, and we'll go down to the bottom here. It has to do with the equity section, and I need to teach people that don't understand what the equity section is. I have to actually teach you what it is before I can teach you this problem and how to resolve it. Okay? So for those of you that are accountants, you're going to recognize what the problem is. It has to do with this stupid net revenue thing that you wish wasn't there. The rest of you that don't know what I mean by that, just hang on a second, okay? Let me teach you a little bit, and then we'll get to the problem of this annoying line and how to get, well, you can't really get rid of it, but how to kind of get rid of it. All right. So first of all, for those of you that aren't accountants, what is the equity section? The equity section is basically the difference between all of your assets. We got $173,000 here, and all of your liabilities. We got $85,000 here. So if you subtract the 85 from the 173, you're going to get whatever's left over, assets minus liabilities, in this case, 88,000. So the equity section just tells you what's left over, the 88,000, what's left, that you can spend on future stuff. But what accountants want to know, and probably what a lot of you want to know, is how much of what's left over is restricted versus unrestricted. Okay? So what accountants will tell you to do, and what a lot of bookkeepers do, is so that a board can see how much is restricted and how much is unrestricted, we'll create these restricted equity accounts. You'll need to create them. I have a parent called Donor Restricted Net Assets, and then I have one for my restricted grants. Some people have a separate one for each grant. I just kind of lumped them. And then I have one for each one of my funds, because I have two funds. So point is that this tells you, and you can see in this example, $19,550 is our restricted net assets. Now, you have to adjust these numbers at the end of each month, okay? That's what accountants have been doing for a long time. We adjust these numbers to whatever the right numbers are. What we can't do so easily is tell you the amount that's unrestricted, okay? Right now, donor restricted says 19,550. It says unrestricted up here is 30, but here's the problem with QuickBooks. Whatever the current year net income is always on this line called net revenue. It looks like it's an account in your chart of accounts. It's not. It's just the total of the current year net income. And just to kind of prove it to you, if I go to the statement of activity, you'll see net income is $38,883.35, and that's the same number that's appearing here, $38,883.35. Now, just so that you know this number accumulates all year long, and then on the first day of your next fiscal year, what it does is it closes this number, or does a entry to kind of move the number out of this account, which isn't really an account, and instead points it to an equity account. Now, which equity account it points it to, there is a hard-coded equity account that it points it to. To find out which account that is, and you'll want to do this, go to your chart of accounts and go to your equity section and look in the detail type area for an equity account that has a detailed type of retained earnings. It only lets you have one detailed type of retained earnings. So because this says retained earnings here, that's the account that it's closing to. And notice there's no balances here, because this is not an account you can get a register for like you can for all your other accounts. But this is where it closes to, and you don't have any choice in the matter. So what I used to tell people to do, and what a lot of people do, is they simply change the name of it from retained earnings. If it's called retained earnings, they change it to unrestricted net assets, and then this becomes the account that everything closes to. So let me show you how this works. It's June 30 right now. I'm going to change the date to July 1. Right now, we've got the equity or retained earnings account at 30. We've got net income of 38. When I refresh the report, you will see now on July 1, I kind of had it this by day. So on June 30, it was 30,000 here and 38 here. But now on July 1, this is zeroed out, and now it says 68. So in other words, it took this 38,000 and it added it to the 30, and that's what's here, okay? So that's what this account does. And what I have been telling people to do, and what a lot of people do, and I think what QuickBooks does too, is they just, if you say you're a nonprofit, they just change the name of this account to unrestricted net assets. So what I want you to do is I want you to create your own unrestricted net asset account outside of the account that's here, okay? And I'm going to show you why I want you to do that, okay? What people have been doing in the past, at least what I've been doing in the past, and what I think a lot of people have been doing in the past, let me just make this total only so I don't have two columns here, is at the end of each month, they've been looking at some reports to determine what your donor restricted net assets are. And if you need to know how to track restricted grants or restricted funds, there's webinars for that on my site. But in this example, I've been using the projects field to track restricted grants, and I see that restricted grants is now supposed to be $43,675. And if I look at my balance sheet at the end of the month, it's actually only $17,200. And the difference between those two is $26,475. So what I'm going to do is, and this is what I've been telling people to do, which I'm going to change that now, but let me just show you what I've been telling people to do and what the problem is, okay? I'm going to change this back because you would actually make this entry on the last day of each month. So, all right. So at the end of the month, we see this is 17.2. We've decided based on a report, this should be, what was it? 43,675. So we're going to make a journal entry here to basically increase this restricted grant equity account by 26. And then what I've been telling people to do is to simply plug it to this 3,100 right here. The retained earnings account, the account that QuickBooks closes to. So I'm going to go ahead and save this. I'm going to go back to the statement of financial position. You don't have to put a class on it because you only really put classes if something affects P&L accounts, and we're just adjusting equity accounts. So now we can see that the donor restricted net asset account is perfect, okay? So that's what we've been doing. It's taken me a long time to get here, but here's the thing that I don't like. A lot of people don't like it, is there's not a place here to see what unrestricted net assets are. Now, you might say, well, no, there's an account here called unrestricted net assets. Yes, but this account doesn't include net revenue. And so it makes it look to a reader as if, well, my net revenue for the current year must not be restricted or unrestricted. It just must be sitting here. So then you have to explain to the reader, no, this is your restricted net assets, 46. So your unrestricted net assets is actually the difference between 88,000 and 46. Your unrestricted net assets is just the plug. Your unrestricted net assets is this number plus this number, because I can't get rid of this number. I want this number to be up here, but I can't get it up here, okay? So it makes it hard to read and to quickly see what your unrestricted net assets are, and it also makes it look like all your activity for the current year is unrestricted, which is not true, okay? So here's what I think a good solution is, okay? All right, so what I'm going to do is I'm going to go to the chart of accounts list, and instead of relying upon this retained earnings account to basically also be my unrestricted net asset account, I'm going to no longer do that. Instead, I've created a separate unrestricted net asset account that functions just like all my restricted net asset accounts. And this plug account, not plug account, but this account that QuickBooks closes to, I'm just going to edit this account and I'm going to change the name of it to Net Revenue Clearing. Oops, might want to spell it right. Account. All right. So that's what I'm going to do. So I've told you basically to change the name of whatever the account is where the detail type is retained earnings, change that to Net Revenue Clearing, and then create your own unrestricted net asset account. Okay, so that's the first thing you have to do, okay, in order to use this new procedure. The second thing that we have to do is, first of all, I'm going to go back to that journal entry that I entered, this one here, and I'm just going to delete it because I don't want to, I want to go back to the way things were before I made that entry. So let's go back to, I'll rerun the report now. And now, yeah, so this is back at 17.2. So, first thing, well, we did the first thing. We created our new unrestricted net asset account. And then whatever is in the net revenue clearing account, I want you to move it over to the unrestricted net asset account, okay? You'll only have to do this one time, but there'll be stuff in there. Just move it to the unrestricted net asset account, okay? Doesn't matter what's in it, just move it to the unrestricted net asset account. So I'm going to go to a journal entry again, and let's just do a journal entry. Let's see. So I'm going to make the journal entry, it doesn't really matter what date you make it as long as it includes the date on your report. So I'll just make it June 30, 25. And I'm going to go to that net revenue account. Net revenue clearing account, and it has 30,000 in it. So I'm going to debit it to get it to 0, and I'm going to point it to the unrestricted net asset account that I have. Okay. All right, we'll save that. Okay, I'll go back to the balance sheet, and now, okay, cool. So now when I look at this, I'll have a net revenue clearing account with 0 in it. I'll have my donor restricted net assets, and I'll have unrestricted. So again, in order to see what the total is of unrestricted, you kind of have to add this and this together to get the total of unrestricted net assets, which is, again, the problem I'm trying to solve for. So what I'm proposing that you do is that every month you make an entry to make not only the donor restricted net asset account correct, but you also make the unrestricted net asset correct in the same entry. Okay? So I'm going to go to do a journal entry now. So it's the end of the month. We are going to do what we should have been doing every month, which is adjusting the donor restricted net assets to the correct amount with a journal entry. So for restricted grants, it says it's 17.2. I look at my revenue by customer report because I'm using projects to track grants. I see it's 43,675. So the difference between 43,675 and what's there now, I got to make an entry for. So I'm going to, and that's 26,475. So I'm going to start kind of by making the same entry that I made before. Going to go to a journal entry. We'll do this once at the end of every month. Okay. And I'm going to go to my restricted grants sub-account in the equity section, and I'm going to increase it by 26,475. Perhaps we got a grant in. But I'm going to adjust not only that one, but I'm going to adjust every one of these. Okay? We're going to adjust every single one of these. So let's say the medical care fund, we spent all the money, it should go down to 0. So medical care fund, and again, you would, if you want to know how to track funds, I have a webinar on that as well. But let's say we looked at a report, much like we looked at the restricted grants report, and we spent all the money. So I've got to get rid of that $13.50. The tornado fund, we'll say we got another $1,000 in, so now it should be $2,000 because we haven't spent any money. So I'm going to go to the tornado fund. I'm just kind of adjusting all of my equities to match what they really should be at the end of each month. So I'm going to make this go up 1,000. Okay. And then the unrestricted net assets, I'm going to change that as well. Okay. Now, before I do that, I'm going to go ahead and finish the entry. Now, the entry I'm going to plug, whatever the adjustment is, I'm going to plug to this clearing account, this 3,100. And you'll see why I'm doing this in a second. I'm going to go to the clearing account. I'm just going to save it. I'm not going to close it because I'm going to change the entry in a second. So I'm going to change it. I'm going to go back up here. I'm going to refresh the screen. And so now I can very quickly see, okay, this is all my donor restricted net assets. It's $45,675. All right. So that's my donor restricted net assets. But I want to make the unrestricted, I want to make this number correct as well. This is the unrestricted net asset account that I created that nothing closes to. I got to do a journal entry to adjust to it, just like I do the donor restricted net assets. So it's 30,000 now. What should it be? Well, whatever the difference between 88,000 up here and the 45 in restricted, that's what this should be. So I'll just do it within the journal entry using, math. And I'm going to clear out, I'm going to remove this now, and I'm going to adjust my unrestricted net asset account. Okay, now how much should I adjust it for? Got to go back in here. So if I take 88,000, I'll do this on a calculator. 88,433.25. That's this number right here, total equity. And I'm subtracting out the portion that's restricted, which is 45,675. So the difference is 42,000 and some dollars. Okay. Now it's at 30. It's got to go up to 42. So I'll subtract the 30 from it. So I know my adjustment has to be increased by around 12,000. So I'm going to go here and I'm going to increase unrestricted assets by 12,758.25. So now unrestricted net assets, it's going to be correct. I'm going to plug it, whatever the other side of it is, I plug to this equity account. Because see, basically, equity, the total shouldn't change. I'm just kind of adjusting between all these numbers. Okay. So now I've got my entry. I'm adjusting all my donor restricted net assets as well as my unrestricted net asset to make it right. I'm plugging it to the clearing account. I'm going to go ahead and click save. You do this once a month. I'm going to look at the statement of financial position. We rerun the report. And now when they look at it, they'll see the donor restricted net assets is 45. Unrestricted net assets is 42. If you add that up, you'll get the 88. The only thing that's weird is I've got this clearing account with a minus 38 and net revenue, which I can't make go away, with a positive 38. Okay? So I really kind of want these to kind of net against each other, but I can't make that happen. So what I'm going to do is I'm going to change this 3,100 number. Let me go back to the chart of accounts. I'm going to change it to 3,400. So it'll be right next to net revenue, because the P&L and the balance sheet, they are in order by account number. So I'm going to take this clearing account. I'm going to edit it. I'm going to make this 3,400. I'm going to go ahead and save it. I'm going to go back to the financial position statement. I'm going to run the report. And now it basically moves it down here. So this is something that I think the board can handle. Okay. We've got, I can just shorten this for the board so they don't freak out. I don't like this open balance equity. So I believe, let me see if this works, I can show all non-zero. Did it work? Non-zero rows, non-zero columns. Or will it not let me do it? Oh, there we go. It got rid of it. Okay, cool. So now I've got all the donor restricted net assets and all the unrestricted net assets, so they can see what's unrestricted net assets, this line here. These two obviously just net each other out to zero. And if there's a problem with a board member, you can just say, well, I can't really get rid of this account, so I just kind of have a contra account to get rid of it. So these numbers will always cross each other out, so just ignore it. And they'll say, okay. Now, there is a fancier way to get rid of net revenue, but you actually have to do an entry onto the P&L, and then you have to remove the line when you're doing it. It's not something that I would recommend. So anyway, but I think this is a really cool way of very quickly being able to see the unrestricted net assets. That was a huge tip. It's probably the longest, most complicated tip I've ever done. So I do want you to put in the comments what you thought. Hopefully you think it's cool. If you don't, let me know that also. And also, next month, and it's going to be August the 19th, 20th, and 21st, join us for our summer 3-pack mini-series. It's 2 hours a day for 3 days. We have guest speakers coming, and we are going to cover 3 topics that I run into issues with all the time. We're kind of focused on expenses this time. We are going to do bills on the first day. And this is all about advanced accounts payable, dealing with your bills, being able to get approvals. There's an approval feature out of QuickBooks you can utilize, how to track expenses, getting reimbursements to your employees, and using apps both inside and outside of QBO. We're going to cover some of the best AP apps, like Ramp is a good example, and show you how that interacts with QuickBooks. So that's first. Then on day 2, mastering bank feeds. So the bank feeds section has changed dramatically in QuickBooks. I assume that you are aware of the different look of it. Some people have the old look. Some people have this new look. It's really very, very cool what you can do with it. We're going to talk about that. And then we are going to end on the 3rd day with my favorite, which is getting your books ready for year end. And this is what to do at the end of the year to get ready for the 990 and the audit. I'm going to do a little bit of teaching on it, and then we're going to kind of break into a question and answer period where you can ask the auditor. It's going to be myself, and I've got a guest coming on with me, another CPA who specializes in nonprofits. His name is Randy Dummer. The two of us are going to do this part together, where you can just ask us any questions rather than asking your own auditor and risk getting your organization in trouble, or maybe looking like you know less than you should. So anyway, please sign up for this thing if you haven't already. And I think that's it. I'll see you later.